Imagine the stock market as a baseball team. You've got the big, famous players, the large-cap stocks. These are like the all-stars. Everyone knows their names. Then you have the small, up-and-coming players, the small-cap stocks. They are full of potential, but might strike out. Mid-cap stocks are like the solid, reliable players in the middle. They're not as big as the all-stars, but they're not rookies either. They have a track record of success and are still growing. These companies are big enough to have weathered some storms, but small enough to still have room to grow. They're the companies you see every day, the ones making your favorite products or offering services you use regularly. How do we know if a company is a mid-cap? We look at its market capitalization, or market cap for short. This fancy term simply means the total value of all the company's shares. Think of it like this. If you wanted to buy the entire company, the market cap is roughly what you'd have to pay. Mid-cap companies typically fall between $2 billion and $10 billion in market cap. This sweet spot means they are big enough to have established businesses and strong management teams. But they're not so big that they've stopped growing. They still have the potential to double or triple in size. Mid-cap companies often find themselves in a sweet spot for growth. They've proven their business model and have a solid customer base. This means they're not starting from scratch like some small caps. They're often nimble and innovative, able to adapt to changing market conditions faster than larger companies. This flexibility allows them to capitalize on new opportunities and gain a competitive edge. Think of a mid-cap company like a speedboat. It can change direction quickly to navigate through rough waters and find the best route to its destination. You might be surprised to learn how many mid-cap companies are familiar names. These are companies like Royal Caribbean Cruises, Logitech, and DocuSign. These companies are industry leaders in their own right, offering products and services used by millions. They represent a diverse range of sectors, from travel and technology to software and consumer goods. Investing in mid-caps means you're investing in companies with a proven track record and a bright future. Section 5. Balancing act growth and risk in mid-caps. Just like any investment, mid-cap stocks come with their own set of risks and rewards. While they offer the potential for higher returns than large caps, they can also be more volatile. This means their stock prices might go up or down more dramatically than those of larger, more established companies. This volatility can be unnerving for some investors, but it also creates opportunities for those who are willing to ride out the ups and downs. It's like riding a roller coaster. There will be thrills and spills, but the overall experience can be exhilarating and rewarding. Section 6. Diversification. Don't put all your eggs in one basket. You've probably heard the saying, don't put all your eggs in one basket. This is especially true for investing. Diversification means spreading your money across different asset classes, industries, and company sizes. Including mid-cap stocks in your portfolio adds another layer of diversification. This can help to reduce your overall risk. If one sector or company size isn't performing well, your other investments can help to cushion the blow. Think of it like building a sturdy house. You need a strong foundation, sturdy walls, and a reliable roof. Each part plays a crucial role in keeping the house standing strong. Section 7. Finding the gems. Research and patience are key. Investing in mid-cap stocks isn't about picking the next big winner overnight. It requires research, patience, and a long-term perspective. Look for companies with strong management teams, solid financials, and a competitive advantage in their industry. Remember, investing is a marathon, not a sprint. Section 8. Mid-caps and you, a good fit for your portfolio? Mid-cap stocks can be a valuable addition to any diversified portfolio. They offer the potential for growth and diversification, making them suitable for investors with a long-term investment horizon. However, it's essential to remember that every investor is different. Before investing in mid-caps, consider your risk tolerance, investment goals, and time horizon. Section 9. The future is mid-sized, long-term growth potential. As the global economy continues to evolve, mid-cap companies are well-positioned for continued growth. Their agility, innovation, and ability to adapt to changing market conditions make them attractive investment opportunities. By including mid-cap stocks in your portfolio, you can potentially benefit from their growth potential and enhance your overall investment returns.